Welcome to TradeTheNBI.com. This is John. This report is for the 14th of April. Well, despite all the crying, the moaning, and the pain of the whole back and forth tariff debacle, we're right back at the 50%, coming off the big day, the bounce back and forth, all consistent with what we saw here, with the shorts still thinking that they had the advantage, that the economies were all going to end. And of course, I love the math that these guys do. They're projecting that China's only going to have like a 0.5% dip in their GDP off the tariffs, but somehow the US is going to suffer, a couple percentage point drop in GDP from it. The math doesn't make any sense. Nobody has to buy a product made in China. And so it makes no sense whatsoever. Now, there's certain products that we don't necessarily have as much availability, and okay, well, those become a problem, but you're still not required to buy them. It's not inflationary from that standpoint, but it certainly points to what a lot of people have wanted to say, is that you've got serious domestic issues with production of a lot of things. And then now the ban on rare earth metals, that it's something that's been talked about for a while. But, it's one of Trump's skills to point out things that people haven't noticed before so that you can clearly see how it works. From a DOC standpoint, though, you can see that green crossing cyan, that's the critical shift. That should be enough to break above the 50% marker when it does get hit. Assuming you don't get too far ahead with the magenta here, though, it can stay elevated for a while. But positive move in the shakeout, -6. And he still needs to get to a positive in order for you to maintain any kind of length of run. We would expect to see that it'll move over the 50%. If it doesn't get there and we start to roll over again, well, then you have the same thing all the way back again. And you're going to be heading back down to that 0% once again. I don't think it's anything all that dramatic. It's all been perfectly clear. Likewise, NQ looking almost identical and almost having the same crossover, not quite the same. You still don't have a full set of REITs from your short-term buyers, but yeah, that is what it is. And you can see shakeout almost, actually, so slightly better than the S&Ps. All good from that standpoint. But you can see in the broader geopolitical scale, China's been isolated. It's been described as the bully of the world when it comes to trade, theft of IP, all the other things. And so there's that argument to be made, whether it means anything. And, now the softening of some items with regard to cell phones and everything else doesn't really matter. The PR situation has been done. It's now been shown, and this idea of the inflation, projecting the Fed to have to cut. So that's an improvement from that standpoint. Of course, rates are reflecting it in that one. But this is huge because you now have oil down in an area that definitely is going to ease. It's actually just going to wipe out any inflationary growth, and you could see even lower numbers. And that ultimately is a huge win, because that was the big stumbling block when we were stuck in this malaise where we kept going back up above in the mid 70s range, and now you're upper 50s. That's exactly what I talked about that needed to happen months and months ago, and that was going to delay any improvement in economic growth. And while it's not immediate, it will take time. This for somehow is a boon for the dollar collapsing, and everyone thinking that the U.S. economy is going to tank. I don't even know what they're going to do when that doesn't happen, and then you got a problem for all of these other countries that are way behind the curve on these things, because it's just making European goods more expensive than that. So it's not really a bonus for them in any way, shape, or form. And they're going to have to deal with that whole idea of the tariffs they charge, because at the end of the day, when you look at the amount of money the U.S. is actually selling in China, is not much, relatively speaking. So where's your harm? And the same situation happens with Europe. When you look at cars and things like that, very few American cars are bought here simply because in Europe you pay these extra duties and tariffs, and it's not a level playing field. So, this argument that people have always talked about free trade, yeah, show me where free trade exists. It's not that many places, because all these little extra things they charge and then the subsidies they give companies, it's not free. It's, manipulated. From a gold standpoint, though, it's still the uncertainty factor and the fact that you still have a continued spending issue that's debasing the value of things. And let's not forget that spending really hasn't changed much. You saw some improvement in the deficit, depending on who you talk to. Dropped to less than what was half of what was expected, simply because of some of the cuts in Doge and that. Those are going to help, but you're still spending way too much money at the end of the day. Just say whatever you want, but at the end of the day, that's the real reality of things. Bitcoin stabilizing this mid 80 range, and it's right up against the resistance. So if the market's able to break through, I would expect that Bitcoin will follow, because it's traded pretty close to the NASDAQ level. From an ETH standpoint, much more problematic, though. They're trying to work through some of the issues, and for people who follow crypto, and that there's a potential that they may get around things. The problem is obviously acceptance always. And until it becomes a mainstream thing, or tokenization is a normalized thing, is what they're trying to push, it's still going to have issues. So this gives you your thing of your broad turnaround move that was the excitement, then the collapse of all that, but literally just brought you back down to the 50% move of it, and now you're literally back to the euphoria of the whole negating of what the tariff thing did. So practically it was just a lot of boom. It scared a lot of people. But now that it's been done, when additional things get done again, there won't be quite the reaction. You see, you started with the shock and awe. Now when you do intermediate things, or at least when Trump does these things, it's not going to have the impact. It's just not going to resonate, because they've already dealt with the shock. So it's sort of like, you've dipped your head in the ice water, and you had that freak out, but now the idea of sticking your hand in the water, in the cold water, that's not going to make any difference. It's the same metaphor. You just removed the incremental mini shock, and you gave a giant one, so that everything after that is just diminished return, and it's not as dramatic. So we'll see how that plays out. Intraday, though, you can see there was some softness, and then boom, it started to catch fire as we headed towards the later part of the day, finalizing the options. All those puts got killed, and here we are in the post-European session here right now, looking pretty strong, and you would expect that's going to continue throughout. So, as we get close to tax day, all in all, the market is normalized. All this great anxiety and fear is going to get worked through, but at the end of the day, people know more than they did before, and there's still two narratives on it. There are the protectionists, and there are those that somehow think that giving others the advantage because the U.S. economy is big is somehow a benefit to U.S. workers. This is really a battle between who you think deserves a better shake, small business or large corporations. And that's kind of what it comes down to. So that's the long and the short of it. As always, we're going to continue to follow the readings, because that is all that we need to stay ahead of the game. Have a good one. Trade well.